you for your patience and understanding. So this afternoon, I'm going to just be educating us about taxation in Canada, what is expected of us, what we're supposed to know, what we're supposed to do. Before I go into my presentation, I'm going to be talking to us like we are brothers and sisters, because I believe most of us are from the same place. So I regard us as brothers and sisters. One thing that I'm going to tell you before I start this presentation is taxation is key in Canada. It is so, so important. I cannot overemphasize it. So please don't get carried away. People will tell you, you don't need to file your taxes. You don't need to do your taxes. It is not true. You need to file your taxes on an annual basis. Having said that, what is taxation? What is taxation in Canada? What do we mean by the Canadian income tax? The first thing that I want you to know is that you pay taxes to both the federal government and the provincial government. Both of them charge you tax, but it is done in such a way that you don't have to go to the province, pay tax, go to the federal level, pay tax. CRA, which is the Canada Revenue Agency, is the agency that is charged with the responsibility of administering these tax laws on behalf of both the federal government and the provincial government. So only CRA is the responsibility authority. So, but it's good for us to know that the taxes you pay is shared between the provincial government and the federal government. Like I said in the slide, CRA is responsible for the collection of federal, provincial, and territories tax payable. And in Canada, we have 10 provinces and 3 territories. What is the basis of taxation in Canada? The basis of taxation is residency. For some of you who maybe you lived in the United States of America before coming to Canada, you would remember or you know that in a country like USA, the basis of taxation is citizenship. In Canada, it is residency. So once you live in Canada and you are in Canada by December 31st of any given year, you must file your taxes. You must file your taxes. So even if you spend 180 days, you're expected to file your taxes. If you spend 2 days and the midnight of December 31st, you're in Canada, you have to file your taxes. So we file taxes based on residency. For income tax purposes, we have 3 different types of residency. We have an ordinary resident. That is somebody who lives in Canada from January up till December. Then you're an ordinary resident and you are expected to file your income tax. We have a non-resident. That is anybody who at any time during the year lived maybe partially in Canada and somewhere else. Then we will deem you as a non-resident. The third type of person is an immigrant. So for those of you who maybe you landed in September, maybe you landed in January, only part of the year, then you're an immigrant or an immigrant. Maybe you left during the year. But if you are here by December 31st, you are expected to file your taxes. What is the Canadian tax system? The Canadian tax system is what we call the self-assessment system. For people who file taxes, maybe in the UK, in Nigeria, you actually have to go to the tax authority, declare your income. They will do the calculation and tell you how much to pay. It's the other way around here in Canada. In Canada, the onus is on you to tell CRA, this is how much income that I made. This is how much tax that I'm going to pay. And that is why I tell all my clients, because it is a self-assessment system, you must keep all documentation for 10 years minimum, because you self-assessed yourself. CRA can wake up tomorrow morning and say, oh, okay, this income that you declared, give us evidence of it, because it's a self-assessment. They're going to need to check once in a while to be sure that you're self-assessing yourself properly. And so that's why we call it the self-assessment system. A self-assessment income system requires the taxpayers to determine their own tax liability. So you say, I made X amount of money, and this is how much I'm owing the government based on some prescribed rates, which we are going to get into. And you are expected to do this on an annual basis. On an annual basis. So every year, you can't take a holiday to say, oh, I filed my taxes in 2019, so therefore I'm not filing 2020 taxes. It doesn't work like that. You have to self-assess yourself annually and report to the CRA. Like I said, this calculation, it's not at your discretion. There are prescribed rates every year that you have to use to determine what your tax liability is. The Canadian system of taxation is called progressive tax. That is, the lower rate of tax is imposed on lower incomes and progressively higher rates of tax on higher income. So the more you earn, the more taxes you pay. The lower you earn, the lower the taxes you pay. And these are the prescribed rates for 2020. These rates change every year depending on the rate of inflation. So what it was in 2019 is not what it is for 2020. They always put into consideration inflation rate. So I'll explain what this how this rate works. So if you earn income from anything less than 13,822, you don't really pay taxes per se. But I would say anything from 0 to 48,535, you pay taxes at 15%. Between 48,535 to 97,609, you pay the excess over the 48,000 at 20.5%. That's why we call it a progressive tax. So let's assume your income is 97,609. We won't charge you 20.5 on the 97,609. We will charge you 20.5% on the excess above the 48,535. So if your income is now between 97,609 and 154,730, you pay at 26%. The excess above the 97. I hope you understand what I'm saying. So that is how it's worked. If you recall that when I started, I said that you pay taxes to both the federal government and the provincial government. So the federal rate, so we have the federal rate and we have the provincial tax rate. For our province, Saskatchewan, I assume everybody is logged in, lives in one part of Saskatchewan or the other. This is for Saskatchewan. It's our own rate is the first 45,225 is at 10.5%. And then the next is 83,989 at 12.5%. And then $129,214 is at 14.5%. It's always the excess, not on the actual amount. So there's a base amount, and then excess over that is what you pay taxes on. In a progressive tax system, taxes are levied individually, not on a family basis. I'm going to quickly say something here, something practical. When I file taxes, the first question I ask an individual is, are you married? And the reason being that I advise and I advocate that couples should file their taxes together. The reason being that taxes in Canada are levied individually. So if I go back to this slide, take for example, a husband earns 97,609. We are going to tax him at 20.5%. If the wife's income is at 48,535, we are going to tax her at 15%. We are not going to combine it. And so we'll say, oh, we are taxing them at 26% because their taxes are between 97 and 150,000. The way to cushion that is when I get to talk about the credits that we use to reduce your taxes, you will appreciate why couples must always file together. Not you go file your own, you go file your own. Because we are able to do some movement so that the whole family comes out better. The example that I have here is what I just described. A family in which one spouse earns 70,000 will pay more taxes than a family where each spouse earns 35,000 each. Because 35,000 is at 15%, 35,000, the other 35,000 is at 15%. But 70,000 per individual is at 20.5%. You will appreciate this when I begin to talk about the credits that we are entitled to. These are the filing requirements. People always wonder who should file taxes, who shouldn't file taxes, when should I file my taxes? Like I said, and I cannot overemphasize it, once you earn income, for those of you who have teenage children who are doing paper route, who are working at maybe Tim Hortons, McDonald's, once they give them a T4 at the end of the year, it is important for them to file their taxes. They will not necessarily pay taxes, but it is good for them to already be in the system. The advantage of that is the minute you begin to file taxes, you begin to create contribution room for yourself for Rrsp. I filed tax for somebody yesterday, and fingers crossed that she will not be charged for over contribution, because she couldn't believe how little her contribution room was. But she didn't start filing her taxes immediately. She started working. So for that alone, I would say for any child, especially if they're between 16, 17, 18, and they begin to make income, let them file their taxes. They'll probably be earning minimum wage, so their taxes won't be huge. Most of the time, they don't even pay taxes. So what are the filing requirements? An individual taxpayer must file a tax return for a taxation year if you have to pay tax for the year. You would say, how do I know? The only way to know is to file the taxes. That's the only way. Why do I have to pay taxes? Because you earn income. That is the truth. That is why you have to file your taxes. How will I know if I'm going to pay taxes or get a refund? You have to file your taxes. So whichever way, you have to file taxes. Okay, maybe I assume a lot of you have small children. There's what we call the Canada Child Benefit. If you don't file your taxes, they won't pay you. And if they even pay you, maybe because you're a new immigrant, they don't know what kind of income you'll be making in Canada, they might be shortchanging you. So if you don't want to be shortchanged, if you don't want to be penalized, you have to file your taxes. I'm going to keep saying that because it is so important. And the reason why it's so important is we all know what 2020 was like. It was a beautiful year. I don't want to say otherwise. And so CRA is being very aggressive. They're being very mean, in quote. So they are going after every single person. So I don't want you to run foul of CRA. So, and that's why I would just keep emphasizing you have to file your taxes. The beautiful thing about the Canadian tax system is if you work and your income is not that much, you are entitled to what is called the Working Income Tax Benefit, WITB. There are some eligible criteria that you have to fulfill. If you fill those criteria, they would even pay you in advance. But there's no way the government is going to know if your income is small or not, except you file your taxes. So for your own good and for your own benefit, it is good. There's a quarterly payment that is given to low income earners. It's called the GST. If you don't file your taxes, there's no how they're going to calculate it. There's no how they're going to even know you, talk less of to pay you. So for all these benefits, you need to file your taxes. It's good when you first come, you go to, I don't know what they call it now, like an open door society, they do some calculation for you, but you might just be shortchanging yourself. So for you not to shortchange yourself, for you to get the full benefit, you have to file your taxes. You would say, oh, but when I came here, I didn't work, I didn't have any income. File a nil return. It doesn't matter. File a nil return. Say, you know what? I didn't make any money. This is me. Then you qualify for the working income tax benefit. Then they can give you more money for your Canada child benefit. Then you get more money for your GST. but without filing your taxes, you're just left high and dry. We have situations where maybe one spouse is working, the other spouse is not working. And then you think, oh, okay, I'm just going to file taxes for the spouse that is working. No, you file taxes for both of you. If both of you are not working, file nil returns. If both of you are working, file your taxes. I don't believe there's anybody on this call that is already collecting pension, but I'll just mention it for education purposes. So when you get up to the age of 65, you are entitled to what is called pension income. The beautiful thing about pension income is that you can split it with your spouse. So take, for example, you get so much money and it's making you pay so much taxes. You can actually share it with your spouse. Of course, there are criteria that has to be met before you can share your pension income. So I just wanted you to know that for information purposes. Another place where a lot of us might miss it or we might not know is when we buy our houses. You know, you've worked maybe a couple of years, you buy a house, God promotes you, you move out of that house, you buy another house. The law says when you sell an asset, when you sell a property, property is a compound word. It could be a house, it could be anything. You're supposed to pay what is called the capital gain tax on it. But if that house that you're selling is your principal place of residence, you are exempted. It is only, and like the lawyers will say, ignorance of the law is not an excuse. That I did not know is not enough excuse not to be penalized. So please, because I've seen a lot of that happen. You know, people just sell their houses, they move into a bigger house, or they relocate to another province, and they just don't remember to put it on their tax returns. You are expected to put it on your tax returns, but you don't pay taxes on it if you lived in that house from the time you bought it till the time you sold it. It's called the principal residence exemption. So please note this: you're moving, you have to declare it on your tax return. Very, very important. For people who already are Canadians, if you understand what I'm saying, that are already contributing to an RRSP, a registered retirement savings plan, it is important that you file your taxes. If you don't file your taxes, you won't get the full benefit of that retirement plan before retirement. The people who do financial planning will be able to educate you more on that. But once you begin to contribute, once you begin to file your taxes, you get the contribution room. Once you begin to contribute into that room, you have to file your taxes because there are added benefits like the home buyer's plan and the lifelong learning plan. The home buyer's plan, you can use it to buy a house. The lifelong learning plan, you can use it to go back to school without having to take a student loan. I know a lot of us, well, I don't know about Regina. In Saskatoon, we have a lot of people who are doing side business. Maybe they're making hair, they're baking, they're cooking, they're making clothes. Please note that you have to declare that income. You say, how will CRA know what I'm doing? There's a department in CRA called Underground Economy. I don't know how they operate. I really would love to work in that department so I can get into their head and see how they do things. They sniff around. This is my definition of that department. So because they are looking for people who are dodging income. So they sniff around to know who is doing side business, who is not doing side business. So if you know you're doing side business, you're making hair, you're cooking, you're baking, you're decorating, you're doing something that a T4 is not generated, you have to include it in your tax return. You have to include it in your tax return. I cannot overemphasize that because you are expected to pay Canada Pension Plan from your self-employment income. Once your self-employment income is above 3,500, you have to contribute to CPP. Very, very important. And that CPP is beneficial to you because by the time you're 65, you can begin to get access to your pension. Remember, we talked about pension split income. Another reason why you have to file your taxes is, I know Canada, and we go back to school and we pay tuition. Paying tuition gives you a credit. It doesn't just give you a credit, you are even able to transfer that credit to your spouse. If it is your child that is going to school, the child can transfer part of that credit to their parents to reduce their parents' tax payable. These are one of the reasons why we need to file our taxes. And if they don't have anybody to transfer it to, they can carry it forward. I've mentioned Rrsp, I've mentioned carry forward, okay? I talked about the basis of a taxation. The taxation in Canada follows the calendar year. So we tax income that you made from January 1st to December 31st. And taxation is on a prior year basis. What do I mean by prior year basis? So right now we are filing taxes for 2020. In 2022, we will file income that you made in 2021. So it's always the prior year. That is how we file taxes. The due date for personal taxes is April 30th. Last year, because of the pandemic and all that was going on in the world, it was extended to September. But the Ministry of Finance have said it is not likely that they would extend tax season this year. So everybody has to file their taxes on or before April 30th. Your question to me will be, what if I don't file before April 30th? If you have to pay taxes, CRA will charge you interest and penalty. Penalty for filing late and interest on the amount that you're supposed to pay them. So it is important, it is good for us to file our taxes within the period. If you are self-employed, if you're a self-employed person, you work for yourself, you have up to June 15th to file your taxes. But if you are owing, you have to pay by April 30th. You can make payments to CRA, you can make payments to CRA and then file. You have up to June 15th to file, but all payments have to go in by April 30th. There are different ways to pay taxes. If you have online banking with a good bank, you can just pay your taxes straight, because most banks have a tax, a pay bill menu that enables you to pay your taxes to CRA directly from the comfort of your home. You can ask CRA to send you a payment voucher. You just issue your check, take it to your bank with a payment voucher and make the payment. Or you can mail to CRA. If you're going to mail a check to CRA, you have to tell them the purpose for which that payment is meant for. You put your social insurance number or your business number, the tax year, and the amount. So you write the amount in front of the check and at the back of the check. What type of income are subject to tax in Canada? For people who have just landed, in Canada, we tax world income. You say, what does that mean? What that means is if you live in Canada and you have investments in Yugoslavia, whatever income you made there, you have to declare it, because we tax world income. So if you have a rental property in New York, you have to declare it when you're filing your taxes. You live in Regina, you live in Saskatoon, you live in Swift Current or Yorkton, and you have a rental property in Toronto, you have to declare it. It is important. Before I scare you with that, most countries have tax treaty with Canada. So I will use our home country as an example in Nigeria. Let's assume I have a rental property in Nigeria that I'm collecting rent. I have to declare it. But if I don't want to pay taxes on that income in Canada, I have to have paid taxes to the Federal Inland Revenue Service in Nigeria and have evidence of that to say, see, I made X naira and I have paid X taxes on it. Hold on to that paper. On my tax return, I will declare it. There's a line, there's a schedule for that. I will declare it. 2-3 years down the line, if CRA picks on me to say, oh, okay, you say you have foreign income, show us evidence that you paid taxes. I have something to show them. Where a lot of people get into trouble is when you don't have evidence that you paid that taxes. Once there's a tax treaty between Canada and that country, you don't pay those taxes again because there's a law against double taxation. Let me bring it further home. For people who landed, let's assume you landed in August. You have to tell us how much income you made from the country you're coming from January up till the day you came to land in Canada. So if you landed August 19, you have to declare the income you made from January 1st to August 18, if you made any income. If you did not make any income, fine. If you made an income, I always tell people, especially newcomers, to say, look, let's do this thing the proper way. Because if you lie, it takes only 5 years before the law catches up with you. How much was your income? Where were you working? Most organizations back home, the remit payee, that's what we call it in Nigeria, the remit payee to the state Inland Revenue Service. Before you file your taxes, find out from your organization, if I need evidence of the tax remittance you made to Inland Revenue Services, can I get it? If they say yes, tell them to send it to you and just keep in a safe place, just in case CRA says they want to see it. If they say no, I will advise you to look for a way to pay those taxes, or else you will pay it in Canadian dollars. I hope you understand what I just said, because we tax world income in Canada. Another type of income that we tax in Canada is the obvious one: income from an office or employment, income from a business. I did talk about those people who have side businesses. Capital gains, that is when you sell an asset, when you sell a property, there's taxes on that. And then any money that you worked to get, you earned it, is taxable. The beautiful thing about income in Canada is it's not all money that you receive that is taxable. So if somebody gifts you money or you get an inheritance, it is not taxable. Gifts, inheritances are not taxable. So your grandma dies, your great-grandfather dies, leaves you a huge amount of money. You don't need to declare it. We don't need to know it. But if you use it to buy a house and you're collecting rent, then that will be taxable. Lottery winning, you decide to play the lottery, you win $1 million, it's all yours. We don't tax it. You don't have to declare it on your tax return. Winnings from betting, gambling, whatever, because you really didn't exact yourself to earn it. So it's not taxable. Strike pay is not taxable. So it's not all monies that you receive that are taxable, just the ones that you had to exact yourself, those ones that you earned that are taxable.
It's just nice to have good, positive energy around. Guys, don't get...
Sorry, I had another presenter. How do you file your taxes? I've been shouting, file your taxes, file your taxes, file your taxes. The easiest way to file your taxes, or the acceptable way to CRA, is to e-file. That is, you either give it to a tax preparer, you buy a tax software. Since 2013, they have been frowning about paper filing. Prior to 2013, you could just, CRA would even send you a tax booklet, a tax return booklet for you to file your taxes. But since 2013, they've been frowning about it. Everybody's going digital, technology is improving. So you can either go to a tax preparer to file your taxes, or you can net file. You go to CRA portal, and there's a way
We can't hear you. Can you unmute yourself, please?
She's muted.
Yeah. Just unmute yourself. It's a button you press to mute yourself. Try again, please.
Can you see it?
Yeah, there's a button.
Bottom left. Bottom left.
Can you hear me now?
Good,
Yes.
good.
Okay.
Great.
Where did I lose you? Sorry. I didn't know I was muted.
Yeah, I think
I was talking about net filing.
yeah,
Yeah.
I think you were muted for just about 10 seconds.
Oh, okay. Yeah, so for people who have confidence, people who know what to do, they can just go to CRA portal, just put CRA in a Google, it will bring it up, and then you can file your taxes yourself. Paper filing is used for people who are non-resident. Most of the tax software is not programmed to be able to file for non-residents. So take, for example, somebody is a Canadian citizen. For one reason or the other, they had to go and work in Kuwait for the whole year. But because they don't want to lose all those benefits that I talked about, it is advisable for them to file their taxes, but they're actually non-resident. So such people, they would have to paper file. But if you're a resident, you've been in Canada, you meet all of those conditions, you either net file or give it to a tax preparer to e-file for you. And once your tax return has been filed, CRA would issue a notice of assessment to say, oh, we've received your tax return. This is what you wrote, like a confirmation of what you have done. But I don't know the criteria they use, but randomly, I think it's a random thing. They just randomly pick tax returns. Remember that I said that the tax system in Canada is a self-assessment tax system. So they will pick randomly some tax returns to say, okay, let's see what Mrs. A said. Okay, line this, line that, line this. They might say, oh, okay, we need evidence of this. Once they do that, they will reassess your tax return. I'm sure some of you have experienced that and say, oh, okay, we are disallowing this. Oh, we noticed that you didn't include this. You are entitled to this. So they will do a reassessment. But the first thing they will do once they receive and process your tax return is to issue you a notice of assessment. Right now, they're really not, they're frowning about issuing paper. I think they're trying to go green, no papers and everything like that. So you can actually sign up an account. You can actually create an account for yourself on CRA portal. And once your notice of assessment is ready, you will get a notification in your account to say your notice of assessment is ready. And then you can go through it. There's a point that I skipped. For those of you who will be going to the bank for mortgage, for those of you who want to do RRSP or one form of investment or the other, the law now is you must go with your notice of assessment. You must go with your notice of assessment. So I think what that means is everybody must file their taxes. If you don't file your taxes, you don't get a notice of assessment. So that is how they are rolling now. In this particular tax season, because a lot of people have come into Canada, I realize that a lot of people don't know what they're supposed to disclose or declare on their tax returns. I did talk about the federal rate. There's what is called the non-refundable tax credit. The reason why it is called the non-refundable tax credit is CRA doesn't give you money, but you can use those credits to reduce your tax liabilities, to reduce the tax that you're supposed to pay. So take, for example, your income is about $45,000. If we're going to calculate that straight, that's about $6,000. So there are some credits that you get that will reduce that $6,000 to like $3,000. A very common one is donations. The law allows charity organizations like churches to issue donation receipt for every money you have given them from January up till December. The credit is a computation. So let's assume your tithe and your offering, your seed offering, your first fruit, and all of that is about $1,000. You don't get credit of $1,000, but you do get some credits that you can use to reduce your tax liability. Medical. I filed taxes for a couple a few weeks ago, and I noticed that the husband was going to pay a lot of money. And I was like, oh, didn't you guys go to the hospital? Because I know the wife had a bit of a condition. They were like, oh yeah, we do have medical receipt. And by the time we applied the medical receipt, the tax payable actually crashed. Not that it came down, but they don't give credit for every medical receipt. It has to be a prescription. It has to be prescribed by a physician. So if you're filing your taxes and you've incurred a lot of medical bills, please remember, and it's so straightforward. All you have to do is go back to the pharmacy where you bought your medication from, and they will print out your bill for the whole year. So you don't have to like, oh, I can't find this receipt. I lost this receipt. I don't know where I put this receipt. Just go back to the pharmacy. They will print it out for you. Another way to reduce your tax liability is Rrsp contributions. I love Rrsp contributions for people who are employees. They work for someone. You get to use the benefit today, and you get to use the benefit when you retire. So it's a win-win. If you have a good financial planner, it's a deferred tax planning scheme. If you have a good financial planner, there's a way they will structure it such that even when you're withdrawing it in later years, you don't have to pay so much taxes. Childcare expenses, daycare, you get credit for that, and that is huge. That one, we give you the full amount that you paid. So if you paid $6,000 in a year, your tax, you get to deduct $6,000. There's no computation. We just give it to you straight like that. Tuition, I did mention that in the course of my presentation. Are you going to school? Is your child going to school? There's a credit for that. It is so beautiful that if by me computing your tuition credit, it's not useful to you, it doesn't change your bottom line. It doesn't change the amount of refund. It doesn't change the amount of taxes. We can transfer it to your spouse. For a child, you can transfer it to your parents to help them reduce their own taxes. So please, and every college, every accredited institution issues what we call a T2202A. All you have to do is print it out and give it to your tax preparer. Moving expenses. You got a job in Saskatoon, 6 months down the line, you have to move to Regina. There's a credit for moving from Saskatoon to Regina. You just have to keep maybe your U-Haul amount, your U-Haul receipt, if maybe you ate on the way, things like that. There are some expenses that you actually get a credit because you moved, but you have to move for work. You can't move for pleasure to say, oh, I'm tired of Saskatoon, I didn't get a job, and then I'm moving to Regina. You can't claim that type of moving expenses. But you get a better job in Regina, you get a better job in Edmonton or in Calgary, in Toronto, and you have to move. Then you get a credit for that. Disability. Whatever form of disability, do you have a child that is autistic? Whatever the disability, all you have to do is to print out a form. I can't remember the number of the form now, but it's a T2 something. Give it to your doctor to sign, send it to CRA. They approve you for disability credit, and then you can claim it on your tax return. Employment expenses. Some of us work in places where we have to use our own funds to do the work. If your organization does not reimburse you, then you can claim that employment expense. But they have to give you what we call a T200. Once they give you that, is signed, the name of the HR person is there and the sign, then you can get a credit for those expenses you incurred in the course of your job. before I open up the room for questions, I just want to quickly clarify something. A lot of people come and they hear tax refund, tax refund, tax refund, and they begin to keep their grocery receipt. They begin to keep every form of receipt. The way tax refund works is you would have paid taxes first. If you pay too much taxes after we've factored in all the credit and all of that, and we find out that, oh, you paid too much taxes, then we refund you. The government does not dash people money. They are not that nice. But once you have overpaid, then they will refund you. Because I've seen people come to me to file their taxes and they don't get a refund and they're very upset with me. And I'm like, you did not pay more than what you're supposed to pay. And that's why you're not getting a refund. It's not automatic. And then some people come with a store bag full of receipt from Sobeys, from Superstore. And I'm like, what am I supposed to do with this? They're like, they said I should keep all my receipt that I will get a refund. I'm like, it doesn't work like that. You have to have paid the taxes. The taxes you pay at the till when you get to Superstore is not the type of taxes I'm talking about. That is sales taxes. That's PST, GST. It's different. I'm talking about taxes on your income. But so they get confused like that and they're angry. They go to somebody else that she didn't do my taxes well. I didn't get a refund. You didn't pay enough taxes. If you paid enough taxes or you paid more than enough taxes, then you will get a refund. So I just wanted to clarify that. I don't know if anybody has any questions for me.
Thank you so much, Sister Olubusola. That was a wonderful presentation. I've certainly learned a lot within this short period. So we want to thank you, give you a virtual clap right there and say thank you for coming and helping us and sharing your knowledge with us. I'm, surprised to learn that moving expenses can be used to alleviate your liability. So I didn't know that. So that's really good to know. We'll dive into the questions. We have some questions in the chat room because we told people to put them in the chat room, but I'll be taking them and then you can help us answer them. Okay. One of the questions is regarding the moving expense. Someone was saying, what if I'm traveling regularly to work because I work outside the city or something like that? How do we treat that?
That is not a moving expense. Moving expense is, let me use the language you will understand, relocating. For the person who asked the question about traveling to work, you have to be very careful. That is one area that CRA audits all the time. What the position of the law is, if you leave, so you cannot claim travel expense from your home to your office. You cannot, because they expect you to go to work anyway. You decided to live very far. They didn't ask you to live very far. But let's assume that my office is in Saskatoon, which is in Saskatoon anyway. So if I go to my office every day, I can't claim that expense. I can't claim the gas, I can't claim the mileage, I can't claim anything. But once I get to work, and then my work says, Busala, go to Regina, I can claim that. Because I'm moving from my office to maybe a client's office, to a branch, a subsidiary. But from my home to my office, I cannot claim it. I actually have a client that had to pay back about $9,000 because of this. She lives in, let's say, Saskatoon. Her work is in somewhere, let's say, Swift Current. And CRA expected her to move to CRA, not commute between Saskatoon and Swift Current. If you decide to do that, you have to bear the cost because you are going to work in the eye of the law. I hope I was able to explain that.
Yeah, I think so too. Thank you for answering that. The other question that I think a few people have asked here is, many people came in 2021 and they are wondering if they should file tax for 2020.
No.
Some of them are saying that the work that they've been doing in Nigeria before they came has actually been taxed back at home. So do they really need to pay taxes? So that's a no.
No, you pay if, like I Somebody came in December 29th, he has to file taxes. But if you came in 2021, you won't file taxes till next year because taxes are filed on a prior year basis. But for people who came in 2021, when you're filing your taxes in 2022, let's assume you came in yesterday. Yesterday was April 9th. You would have to declare the income you made from where you're coming from between January 1st and April 8th. But you would do that next year because you just came in 2021.
And then combine that with what you do in Canada.
Yes, please. Yes.
Okay. Thank you for that. The other question here, interesting question, that if I live in Canada but work outside Canada in an organization that is tax exempt globally, how do I deal with that? You know, and also, what if I'm trading on cryptocurrency? Do I pay tax?
That's a very good question. I'll take it one after the other. You work with an organization that is globally exempted. Is there any organization like that? I'm not sure. I don't claim to know it all. But like I said in my presentation, if Canada has a tax treaty with that country and you have paid taxes in that country or that they are exempted, they won't expect you to come and pay taxes here. But there must be a document that will clearly state that. To say, oh, it's a tax exempted. Take, for example, you're working for a church. Churches don't pay taxes. Do you understand what I'm saying? CRA won't say, oh, okay, because you work in a church, then come and pay taxes. No, it doesn't work like that. They respect the rules of the other person. Talking about crypto coins, to be honest with you, I can't answer that question. But one thing that I would tell you is we actually have a separate schedule for people who do business on the internet. I'm not sure I even have any clients who does business on the internet, and I don't have any client who trades in crypto coins. The little that I know about it, how do you determine the income that you have made? If you can determine that income, believe me, we will tax you. But I really can't answer on crypto coins. But on the global tax exemption, just give us a document that states that and you'll be fine.
And again, I think what will be important for that person is to keep that kind of document for maybe 10 years, because if you are exempted from paying taxes, then that's something you should definitely keep a document on.
I totally agree with you. Yeah.
There is also an interesting question that I'm also thinking about myself. If we're working from home in this COVID era, you know, how do we deal with that? We've seen situations whereby they're sending some document, some employees are sending some documents, some employers are sending some document that if you are working from home, you can file up to a certain amount. And then they say something that, then other than that, you have to do the calculation, and I don't know the details.
Okay, let me answer that question, and I'm going to answer it in a practical sense of it. I'm not going to give you textbook answer. If you're working from home due to COVID, CRA says your employer must give you a T777S. A T777S. They have to give you that. Once you have that, it shows that you are authorized to work from home due to COVID. So the next thing to do is to calculate your credits because you worked from home. So there are two methods to calculating your credit. We have the flat rates, where you just tell us the number of days you worked from home due to COVID, not including statutory holidays and weekends. And then we give you $2 per day, up to a maximum of 200 days. Okay, that is the flat rate method. The other method is called the detailed method. In that detailed method, you can claim your internet, you can claim your light, you can claim your heat. But a lot of us run away from that method because we believe it will trigger an audit. CRA will ask you, I'll give you a very funny example. You can claim your internet, but you're supposed to claim only the portion of your internet that you used for work. And then I ask myself, how am I supposed to do that? Am I supposed to calculate? I'm not a techie person, the kilowatt, or I don't know what, I don't know how to measure data, whatever. Do you understand? So a lot of people are like, you know what? I don't even want their stress. Just, I worked 169 days. Help me calculate my flat rate. Let me go. But if you are sure, some people are really meticulous. They keep their receipts, they keep their information, they do everything. If you are sure, then we can go the detailed method. A lot of people who have claimed they working from home credit, their employers actually, some people, not all of them, their employers actually write there, claim the flat rate method to avoid CRA stress. You understand what I'm saying? But I say if you're meticulous, you know, you keep everything, you put it in an envelope, you even make photocopies, you scan it onto your computer. So the day they come, you just print it out, give it to them, there's no stress. Then you can go through the detailed method. But before you can claim it, your employers have to give you the T777S. Let me add to that. There are some people who generally, the nature of their job entails them having employment expenses. I'll give you a very good example. People who work with the health region and are doing care home. So they have to go visit their client, they have to go take care of their client. They actually get additional schedule that they can claim the credit. So they get they have to get a T77S and they have to get a I think it's a 2200 or a T22 something from their employer. So once they can get those two, we can claim normal employment expense for them in addition to working from home due to COVID. Is that clear?
Yeah, yeah. Thank you. We should try to go with the flat rate option. Or if you're meticulous,
Yes.
you can go for the
Detail
by detail and, you know,
Yeah.
be ready if there's an audit, keep
yeah.
your documents. What if you
Yes.
don't get the T777 at all from your employer? Do you request it from them?
Yes, you can request it from them.
Okay.
You can request it for them to say, oh, you asked me to stay back because of COVID. I need a T77S. It's a simple, straightforward form, and most employers have been issuing it.
Okay. I think we might need to spend a little bit of time, just a few minutes, on working outside Canada, because we still have a few questions here. Someone is saying, if I have a property I inherited back at home, and you said an inheritance should not attract it, but the person is collecting rent from it back at home. The other person is saying internet-based income outside of Canada. So these are some of income that are related to outside of Canada. Maybe just a few more minutes and we would address a few more questions and we'll be done.
Oh, no problem. Let me start the story from the beginning so that you will understand the thought process. In Canada, you are taxed your world income. World, W-O-R-L-D, world income. So anywhere you're making money, we want to know. You understand what I'm saying? The reason why a lot of people don't declare it is they don't want to pay taxes. So I tell them, the gentleman who got inherited a house, we will tax the rental income. The only type of inheritance we don't tax is if you got cash, if you got money. You understand what I'm saying? But if you got a property and you are not living in the property, you have turned the property into an earning, a money-making venture, then you're doing business. You're doing rental business, regardless of how you got the property. You're doing rental business. You understand what I'm saying? So you have to pay taxes on it. But you and I know that to, depending on you, depending on your cash flow, depending on your outlook, depending on a lot of things. Take, for example, you have a property in Nigeria that you're getting rent. My advice to you is pay those taxes in Nigeria. Because in Nigeria, when you pay taxes, they give you what is called a tax clearance certificate with the coat of arms boldly on it. So just keep it. Just look for an accountant in Nigeria to file your taxes. Just keep it and then declare it here. I'll tell you, now let's talk to each other on a one-on-one. I have a client who got into trouble because of this. Because a lot of us, when we were coming, we wanted our papers to look good. So they say, which property do you have? You write all kinds of property. The truth of the matter is most government agencies work together in Canada. If you go to ISC, Information Services Corporation, and you register a business, they immediately give you a CRA number because ISC and CRA work hand in hand. The same thing with immigration. If you go onto the website now, they have only one website. You just click on the one that you want. So when you were coming to Canada, you wanted to do your nominee, your federal skilled worker. They said, what assets do you have? You said, I have assets in Lekki, in Ikoyi, in Abuja, and everything. And then you file your taxes, you keep quiet. One man that doesn't have plenty work, who's just playing around one day, say, hey, this person, maybe he said he has a, how come? Then he compares it with your tax return. Then Wahala starts. So I always tell people, you know what? Always go back to where you're coming from so that you don't get into trouble. To answer the question, you have whatever income you're making, you have to declare it. It's as simple as that. You now decide, do I want to pay the taxes in Canada or in the local currency? But you just have to pay taxes on whatever you earn. Like I said, if you have paid too much taxes, we will give you a refund. Did I answer the question?
Yeah, and if it's an internet-based income, you still have to declare it here in Canada.
You have to. I have a client who is a YouTuber. I think that's what they call them. My children will be laughing.
There's a question on that, actually.
Okay. You have to. You see, but let me quickly say something. When I say you have to declare your income, take, for example, the guy who does internet business. He had to pay for internet. He has to deduct it from the money he's making because he needs internet to do the internet business. Maybe he had to get a graphic designer to design something for him. He has to deduct it. So at the end of the day, it is actually your profit that we're taxing. So you make $1,000 per day, but you're spending 500. You're not going to declare 1,000 without declaring the 500. You will declare the 500. So at the end of the day, we are not taxing your whole income. We're taxing your income less your expenses.
That makes sense. Thank you so much. One question here that we have says, I got CERB. I guess these are people that are affected by the COVID and they got a flat rate and didn't work at all last year. So what do they file as taxes in that case?
The person that got CERB, CRA should have sent them a T4A. The COVID subsidies, this is me talking. I think it wasn't fair, if you understand what I meant, because it's income, so it's taxable. And so my question to CRA was, you give those people this money because they don't have income. Where are they supposed to be able to pay the taxes on the income since they don't have money? So what we were advocating for was that they should have taken those taxes upfront. Yeah. But who are we to tell CRA what to do? We can only grumble, write petitions. That's the best we can do. So for that person who got CERB, CRA should have sent you a T4A. It is that T4A that you would use to file your taxes.
Okay, excellent. The last question here is similar to what you've dealt with already, but I will read it. Maybe there will be something else that you may be able to say. I do a cookware business, which requires me using groceries, gas, utility bill, and including my personal clothing, which is used for my presentation. Have been filing my tax, including these items listed, and I've received tax return from CIRE. Is this wrong?
What kind of business will require you to?
Maybe someone cooking at home, for example. You're cooking at home and you're using, you're paying the bills. just like someone working from home, but self-employed.
Okay, I'm self-employed, but I don't claim my groceries. So it's that grocery one that made me chop.
I think for this one, they use the grocery as presentation for what they are selling.
Oh, then it's not grocery. That's part of your cost of purchase. You understand what I'm saying? I'm assuming the person is a salad master or food master person, those people who sell those expensive pots. So if you need to like buy grocery to be able to do your presentation, I believe CRA will allow it. For clothing, CRA allows clothing to a limit, and it would depend on the type of profession. So for people who are motivational speakers, for people who are event, CRA allows clothing, but I know they don't allow 100%. So you can claim part of your clothing, but not all. You understand? Okay. There's actually, CRA allows what we call meals and entertainment. Take, for example, I go have a meeting with a client over coffee. I can claim my coffee because it was a business meeting. So for that person asking about grocery, it will be a business meeting, a business presentation. But the one you want to eat in your house, no, it's not allowed.
Okay.
There's a question that wasn't asked though.
Sure, okay.
It's there in the chat room, so I don't know. Or can I just ask it?
Please go ahead.
Okay, let's say you're a business owner and you cook and you do your cooking from home. Mm-hmm. Can you file half of your rental? Let's say you pay over $1,000 a month for the rent in your apartment and utilities, electricity, and all that. Can you file those as part of your business expenses?
Okay, then the rule about people who do their business from their home, the rule is you must have a designated space in your home that you use for business, number one. In that space, you have to be able to meet with a minimum of one client. Do you understand what I'm saying? That's the rule number two. Once you fulfill those conditions, you will now tell us what percentage of your home is the designated space. I'll give you a practical example. I live in a 3-level place and the whole of my basement is my office. So I claim my utilities, I claim my internet, I claim my, what do I pay for? Electricity, heat, but I claim only 1/3 because I'm using 1/3 of my house for business and I can receive clients in my office. You understand what I'm saying? So you can claim that, but it has to be a percentage of the designated space you're using for business in your home.
Okay, so let's say you use, sorry, I'm really going back and forth with this. Let's say you use your kitchen space, obviously for cooking, but you don't have clients come over to come sit down to eat or whatever, like they just come over, pick their food and go. So
go ahead, sorry, I'm sorry, go ahead.
Okay, yeah, so how do you, will I say, how do you do the math,
Very good.
Yeah.
You know that for every apartment, every home, every place of residence, they'll tell you it's something square foot, square meter, square something like that. Sorry, all I know is accounting. When it comes to other things, I'm a novice. So what I always, because I have some clients who that is applicable to. So what we have done is to say, okay, your total house is 1,200 square feet. What do you think is the size of your kitchen? They will say 200. So we do 200 over 1,200. And that is that percentage that we apply to their gas, to their electricity, to their rent, to their internet.
Okay. So sorry. I just, because I do.
Go ahead.
I'm trying not to get into trouble. I'm just want to be, yeah. So let's say I talk to the rental service, whatever, and they give me a percentage of the home. So I would do the kitchen. Let's say I just come up with a number. and do that and probably multiply. So do I add my internet, my water bill is part of my rental this thing though? Like, so I don't have to pay for water.
You can add, let me quickly say something to you.
Okay.
Like you said, you don't want to get into trouble. My prayer is God will not allow us to be audited by a CRA agent that is going through a divorce or that is bipolar. Because most of the time it's dependent on the agent. I'll give you a very practical example. I have a client who works from home. And so we were claiming home office expense. When they were going to audit her, do you know what CRA told her to do? CRA says she should draw her house plan and show where her office is. And she lives in a very old house, one of these old houses. She had to go to the city to go and get her house plan. But I have another client that they would audit. And once you just tell them, oh, it's something percentage, they leave you. So it's sometimes CRA agent dependent. So once you see that letter, just pray for uncommon favor. Now to answer your question, yes, you can go to your landlord to ask for what is the square foot. Don't just come up with an arbitrary number. Come up with a number that you can defend in the face of an audit. So say, oh, I mean, just looking at it, do a rough measurement. Of course, it won't be exact, but let it not be too far away. And what are the things you can claim? What do you use? You use electricity to cook. I assume you have an electric cooker. You have a microwave. You have a blender that you use to blend the pepper. You use heat because you can't cook in the cold, so you need heat. So you take a percentage of heat. Rent, without you being in that place, you won't be able to do the business, so you can get a percentage of your rent. Maintenance, maybe the microwave spoils and you have to replace it because it's part of what you use to generate your income. What else do we pay for at home? The food stuff that you buy, you have to keep it separate from the one at home because that is your direct cost of purchase. Because you have to buy the rice before you turn it into jollof rice. So the cost of your rice, you can claim it, yeah. But make sure that, it's not absorbed, sorry. They're now like, oh, okay, but you eat jollof rice in your house. You understand what I'm saying? It's just a diligent, meticulous way to keep record. And then it helps you too. You know if you're making money or not. Did I answer your question?
Thank you so much, Ma. Yes, you did. Thank you.
Okay. But the first thing first, that business must be registered, right?
Yes and no. Now we are going from tax to accounting, but it's okay. I'm an accountant. It's fine.
Thank you, ma'am. We need all the information we can gather. Thank you.
You're most welcome. I like doing things properly. I'm a tidy person in terms of my books. I would say this is a personal advice. Some people might not agree with me. I'll say if you know that you are going to do business, you're not doing a hobby, you are doing business to make money, go and register. Total cost of registration is about $100. That wouldn't kill anybody for somebody who wants to do business. And ISC is there for you to register. You don't have to register as a limited liability company. You can register as a sole proprietor. And then as your business grows, you understand what I'm saying? As your business grows, then you can convert it, you can change it into a limited liability company. And I'll tell you why I advise you like that. A lot of us do our businesses as a side hustle. We still have a 9-to-5 job, we come back, we do those businesses. A 9-to-5 job is already taking out taxes. For good organization, they will take the exact amount of taxes they're supposed to take. Some would even take more. By the time you're filing your taxes, you're filing your employment income, you're filing your business income. Because you are just starting, your business hasn't really good. You're not making plenty money like that. Do you understand? The tax that you have paid on your 9-to-5 will cushion the tax from your business. So you won't pay so much taxes. By the time we add donation receipts, Rrsp, medical, all of those things, it will cushion your tax liability. But once you begin to make good money, go and convert it into a limited liability company. Your employment income might not be able to cushion it enough. Then you will begin to work for Trudeau.
And good money, like more than 5,000 annual?
Come on. No,
Yeah,
not like
let's
5,000.
let's know the percentage. So let's say you make 3,000 a month from your
Stop.
business.
I'm not talking of those kind of money. Once you begin to make like 30K.
Ah, okay. Like 30K a month or a year?
I would say a year. Because, and I'll tell you how I came about 30K. Once your income, once your sales is above 30,000 in a year, CRA expects you to begin to pay GST. You understand? CRA expects you to begin. So I always use 30,000 as my benchmark.
Okay. I know you have a big day as well at home there. It's your husband's birthday.
Can
Isn't
I
that
ask
so?
this question, please?
So
Go
happy
ahead.
birthday.
Thank
But
you.
do you still have time for one more?
Yes, I do. Yes, I do.
Okay. This question says, if I have a rental property in a different state or province, and you go down there, say once in 6 months, do you claim the travel expenses? Let's say I stay in Regina and I have my rental in Edmonton.
Who is managing the rental? Do you have a property management company managing it, or you manage it yourself?
Can we look at it both ways?
Okay, if you manage it yourself, yes, you can claim your travel because you have gone to work, kind of. You have gone to check out your property. Do you understand what I'm saying? But if you have a property management company, then you can claim it if you are going to have a meeting with them over your property. So it's a business trip. It's not a leisure trip. Do you understand what I'm saying? But you can't have a property management company manage your property because you can claim those expenses, those 10% that they deduct. You can claim it as a business expense. So you can't claim that and then say you two are managing the property. They're like, that's an over management. What are you doing?
Okay. All right.
Let me
Thank
say
you.
something. You see, most business expenses can be claimed if you can substantiate it. So that's why I said, I don't pray for anybody to get audited, but just in case you get audited, just pray that it's not a CRA agent that is going through a divorce that has bad issues, because they will take it out on you. Because you might even give some of them evidence and they will just look for a reason why it is not acceptable to them. Then you can take it higher. You understand what I'm saying? But your business expense, once you can substantiate it, I believe you're good.
Okay, thank you. I think this is just the last question. That should we advise newcomers who are just coming in to file by themselves or hire a professional to help them? I mean, what would you advise?
Whichever way I'm biased, that's the truth. I'm a tax filer. I can't tell you to go and do it yourself now. So I'll tell you to come to me. That's the truth. But jokes apart, the truth is you won't know what to do. We know what to look out for. I gave an example during my presentation. This couple incurred over $2,000 in medical. When they were giving me their document, they didn't know. I just put two and two together to say, these people will have medical. And I was like, do you have medical? They said, yes, we have, it's plenty. I was like, this same couple, they did training. They didn't know they could add it to their tax return. So I asked them, did you do any training? The wife screamed. So there's some things you just won't know. That is the truth. But some people are ethical. They know everything. So if you're an ethical, I would say, go do it yourself.
Okay. I want to thank you very much. I think we can continue on and on because this is a very interesting topic, but we have to respect that we don't want to take too much time. But I would appreciate it if you can give us your info so that people can reach you. So if you want to type it into the chat room, and if not, you can give it to us. We'll put it on our group
If I knew
but-
how to do this, it would be so nice.
Or is it on
I'm not
your
even sure where.
title page?
Oh, okay, I see. Okay, it's right. Okay. Okay, I see it now. I'm chatting it. Okay. Thank you. I see it now. Because I
Yeah,
did
please,
full screen.
please
I
put it
did-
in the chat room for everyone. So, people may want to reach you, people may want to hire your services, whichever case. But I think that would be a good way to continue this conversation. So I will, as you're doing that, I will hand this over to Bremika to conclude this session for us. It has been a really good session. So thank you so much, man.
Thank you. I think I sent it to only one person. I'm so sorry. I'm going to just do it again. I apologize.
No problem. Yeah, I think you're really getting the handle in a short time.
Yep. I use Zoom all the time. I wonder what's going on now. I think because I put it full screen, so I didn't see a lot of things.
Yeah.
Okay.
Okay, we can say it now. Bremika, please conclude for us.
Thank you so much, Ma, for taking this time out. And once again, I want to say happy birthday to your beloved husband.
Thank you.
Wish him many happy returns, good health, and all that he would, want to enjoy and want for himself.
Thank you so much.
With your permission, if you don't mind, we'll share your details on our platform, just in case anyone wants to reach out to you with any other questions or inquiry or hire your service, like Rashego has said. And also we'll still send the message and the question across to you.
Okay.
And then if in future, again, there is a need for that, I hope you won't mind us reaching out to you.
No problem. It's my pleasure. My pleasure. Thank you very much for the opportunity.
Thank you so much. Thank you, everyone. Thank you, Sister
Thank you.
Anita. Thank you for the time that you took out, and then have a good weekend.
Will do. Thank you so much.
Yeah.
Bye-bye.
Thank you, ma. Happy birthday to Okulaolu.
Who is that?
My name is Shola Fagwe. He trained me in Kaduna
Oh,
National Bank.
I will tell him. Thank you. Thank you. In National Bank?
Yeah.
Okay. Thank you. Bless you. Thank you. Thank you, everybody. Thank you. I love tax, so this was nothing. I enjoyed myself as well. Thank you.
Thank you, ma.
All right. Bye-bye.
Bye, everyone.
Bye.